Welcome to Kohl's Earnings Report, your source for in-depth business analysis. Today, we dive into Kohl's Q2 2025 earnings, released August 27, 2025, which sparked a stock surge of over 20%. Is this a true turnaround for the retailer? Let's break down the numbers and implications. Welcome to Kohl's Earnings Report, your source for in-depth business analysis. Today, we dive into Kohl's Q2 2025 earnings. From its headquarters in Menomonee Falls, Wisconsin, Kohl's Corporation, ticker KSS, reported fiscal second quarter results for the period ending August 2, 2025. The retailer delivered adjusted earnings of 56 cents per share on $3.35 billion in revenue, surpassing Wall Street's consensus estimates of 48 cents per share and $3.32 billion. Net income reached $62 million, up from $58 million a year ago, reflecting stronger profitability. The stock soared over 20% today, but let's dig into what's driving this rally. Financially, Kohl's showed resilience. Total revenue of $3.35 billion was down 3.8% year over year, but comparable store sales declined by a better-than-expected 4.2%, compared to forecasts of a 5% drop. Gross margin expanded by 100 basis points to 39.1%, fueled by disciplined inventory management and fewer markdowns. Operating income climbed to $166 million from $146 million, yielding an operating margin of 5.0%, up from 4.3%. Selling, general and administrative expenses fell 9% to $1.25 billion, or 37.3% of revenue, showcasing cost efficiencies. Free cash flow improved to $110 million from $90 million, bolstered by a 6% inventory reduction to $2.8 billion, reducing carrying cost. Kohl's attributes these gains to strategic initiatives. The Sephora shop-in-shop, now in over 900 stores, drove strong beauty sales and foot traffic. Proprietary brands like Sonoma and Croft and Barrow delivered higher margins, strengthening Kohl's competitive edge. Digital sales, comprising 25% of revenue, grew 2% year over year, offsetting some in-store declines. CEO Tom Kingsbury's turnaround plan is showing traction, with Kohl's raising its full-year adjusted earnings guidance to $2.10 to $2.70 per share, up from $1.90 to $2.50, and projecting flat to 1% revenue growth for 2025. But the stock's 20% jump raises red flags. Analysts point to speculative meme stock trading, driven by retail investors on platforms like X, as a factor in the rally. Trading volume spiked to 8 million shares today, double the average, with short interest at 15% of the float adding fuel. Kohl's forward PE ratio of 10.5 is attractive compared to peers like Macy's at 12.2, but its beta of 1.8 signals high volatility, a risk for investors. Kohl's operates in a cutthroat retail environment, facing Amazon's e-commerce dominance and value-driven competitors like Target and Walmart. The department store model is under pressure, but Kohl's loyalty program and Sephora partnership offer differentiation. Still, reversing comparable store sales declines remains critical, and macroeconomic risks, rising inflation or softening consumer spending, could derail progress. For investors, here's the bottom line. Kohl's Q2 beat with 56 cents per share, a 39.1% gross margin, and $110 million in free cash flow, signals a turnaround gaining steam. Sephora and cost discipline are key drivers, and the raised guidance to $2.10, $2.70 per share reflects confidence. However, speculative trading and a 4.2% comp sales decline warrant caution. Long-term investors should track digital sales growth and comp trends, while traders may capitalize on volatility. Visit investors.kohls.com for full details. Kohl's Q2 2025 earnings show promise with stronger margins, cost efficiencies, and strategic wins. But speculative trading and retail challenges cloud the outlook. Investors, stay vigilant. This is Kohl's Earnings Report, signing off.